Hello again, fellow BeachBum traders. Thank you for watching our video on how to read Form 4 SEC filings. Thank you for taking the time out of your day to watch our video on how to read Form 4 SEC filings. In this video, we're going to go through the SEC Form 4 filings in detail. We'll explain what is SEC Form 4 and how do you read Form 4 filings. We'll go through this, an explanation for beginners, SEC Form 4 explained for beginners, and then again we'll dive into detail on the SEC form statement of changes and beneficial ownership and give you an overview of that form, and then also how to use insider and institutional stock ownership using the SEC form. Hopefully all of this information will equip you to succeed in your trading career and give you that information on how to read a Form 4 SEC filing. So let's get started. This video was produced in direct response to a request by one of our fellow BeachBum traders, 1337 Duncan, in our free Discord, was asking for an explanation of how to read a form, SEC Form 4. So again, to respond to our fellow BeachBum traders' request, we're producing and providing this video for the mutual benefit of all of our fellow BeachBum traders. Again, this is a request made in our free Discord. You can find an invite to our free Discord in the description box below, and you can see you can request videos, additional information, due diligence, etc., on any topic that would be of interest or value to you, help you succeed in your trading career, and we will do our best to be able to accommodate responding to those requests as soon as we're able. So we hope this all helps.
Form 4 is a U.S. Securities and Exchange Commission (SEC) filing that relates to insider transactions. Officially known as Form 4, Statement of Changes in Beneficial Ownership, it needs to be completed and filed with the SEC whenever a company, insider, in the U.S. buys or sells shares in their own company. In this guide, we look at the basics of SEC Form 4 including how to read Form 4 filings. We also explain how Form 4 filings can be used to generate investment ideas. Form 4 is a U.S. Securities and Exchange Commission (SEC) filing that relates to insider transactions. Officially known as Form 4, Statement of Changes in Beneficial Ownership, it needs to be completed and filed with the SEC whenever a company, insider, in the U.S. buys or sells shares in their own company. In this guide, we look at the basics of SEC Form 4 including how to read Form 4 filings. We also explain how Form 4 filings can be used to generate investment ideas. What is SEC Form 4? Form 4, Statement of Changes in Beneficial Ownership, is a two-page document in which insiders must list any recent purchases or sales of company stock they have made, as well as the exercise of any company options. The form requires insiders to list the details of any such transactions, their holding in the company after the transactions, and their relationship to the company. Who is required to file Form 4? Insiders consist of officers and directors of a company, as well as any shareholders that own 10% or more of a company's outstanding stock. When does a Form 4 need to be filed? Form 4 is required to be filed before the end of the second business day following the day on which a transaction resulting in a change in beneficial ownership has been executed. How can investors use Form 4 filings to their advantage? Form 4 filings can help investors identify transactions that top corporate insiders such as CEOs, CFOs, and chairmen have made in U.S. publicly listed companies. This is valuable because corporate insiders have a genuine information advantage over other investors, and a number of academic studies have found a link between insider transaction activity and future stock returns. As such, Form 4 filings can potentially be used to generate investment ideas. As a general rule, Form 4 filings that show substantial insider buying activity are a bullish signal. If insiders are buying, it shows that they are confident about the future and expect the company's share price to rise. Form 4 filings that show that insiders have been selling stock are a little more difficult to interpret. This is because there are a number of reasons that insiders sell stock that have nothing to do with the company's future prospects. For example, an insider may simply wish to diversify their investments. Form 4 filings that show large insider sales should not be ignored, however, as in some situations, it can be an indication that insiders are offloading their stock in the expectation that the stock will soon fall. Where can investors find Form 4 filings? There are a number of ways that you can gain access to Form 4 filings. The first way is to go directly to the SEC Edgar database. Here, you can search information collected by the SEC using a variety of search tools. The second way is to access websites that offer Form 4 information. The third, and easiest way, to track Form 4 filings is to subscribe to an insider transaction data provider such as 2IQ Research. How to read a Form 4 filing. SEC Form 4 filings are easy to read and interpret. Below is an example of a breakdown of this filing. Section 1 contains the details of the insider that made the transaction. In this case, it was Elon Musk. Section 2 contains the name of the security, Tesla Inc. Section 3 contains the date of the earliest transaction, the 14th of February 2020. Section 5 contains the details of the relationship of the reporting person to the company. From the boxes ticked, we can see that the insider was a director, officer, CEO, and 10% owner. Table 1 contains the details of the trade. In this case, we can see that Musk purchased 13,037 Tesla shares at a price of $767 per share. Following the transaction, he owned 34,098,597 Tesla shares. There is also a comment in the explanation of responses section that provides more information. This tells us that Musk purchased the stock through the Elon Musk Revocable Trust, which he is a trustee of. What are the Form 4 transaction codes? Form 4 transaction codes are listed below. General transaction codes P, open market or private purchase of securities. S, open market or private sale of securities. V, transaction voluntarily reported earlier than required. Rule 16b-3 transaction codes A, grant, award, or other acquisition. D, sale, or disposition back to the issuer of the securities. F, payment of exercise price or tax liability by delivering or withholding securities. I, discretionary transaction, which is an order to the broker to execute the transaction at the best possible price. M, exercise of conversion of derivative security. Derivative securities codes. C, conversion of derivative security. E, expiration of short derivative position. H, expiration, or cancellation, of long derivative position with value received. O, exercise of out-of-the-money derivative securities. X, exercise of in-the-money or at-the-money derivative securities. Other Section 16b, exempt transactions and small acquisition codes. G, bona fide gift. L, small acquisition. W, acquisition or disposition by will or laws of descent and distribution. Z, deposit into or withdrawal from voting trust. Other transaction codes. J, other acquisition or disposition, transaction described in footnotes. K, transaction in equity swap or similar instrument. U, disposition due to a tender of shares in a change of control transaction. Form 4, Summary. SEC Form 4, Statement of Changes in Beneficial Ownership is a document that is required to be completed and filed with the SEC whenever a company insider in the U.S. buys or sells shares in their own company. Insiders consist of officers and directors of a company, as well as any shareholders that own 10% or more of a company's outstanding stock. Form 4 filings can potentially provide investors with trading signals. Insiders have an information advantage over other investors, and studies show a link between their trades and stock performance. A Form 4 filing that shows a significant purchase or sale can be a good starting point to further investigate a stock. One of the best ways to track how management feels about the company they work for is to watch for insider buying or selling. Using Form 4 can help you determine any trades leadership makes regarding their stock options. With the increase of pay for insiders, C-suite, in the way of stock options, tracking their moves can give you great insight into what insiders think about the strength or weaknesses of the company. A note of warning, not all insider buying or selling is a result of some move taken by leadership. It might also be that the manager needs to use a large amount of cash to buy a home or pay for school for one of their kids. Using Form 4 is not difficult once you know where to find them and how they read the report. Unlike the 10K, 10Q, or 8K, Form 4 remains not as well known but can provide valuable insights once you know where to look. Today we will discuss, what is the SEC Form 4? What triggers a Form 4 filing? What does Code M mean on Form 4? What can we learn from reading a Form 4? Where can we track Form 4 filings? What is the SEC Form 4? From Investopedia, SEC Form 4, Statement of Changes in Beneficial Ownership is a document that must be filed with the Securities and Exchange Commission (SEC) whenever there is a material change in the holdings of company insiders. Insiders consist of directors and officers of the company, as well as any shareholders, owning 10% or more of the company's outstanding stock. The forms ask about the reporting person's relationship to the company and about purchases and sales of such equity securities. The filing of Form 4 relates to Section 16 and 23 of the Securities Exchange Act of 1934, as well as Sections 30 and 38 of the Investment Company Act of 1940. Disclosure of information required on Form 4 is mandatory and becomes public record upon filing. All that tells us is that whenever the CEO, CFO, or any other manager that owns more than 10% of the company's stock buys or sells any of their shares, they must report on the Form 4. The buying or selling of the shares refers to, most often, insider buying or selling. Insider buying or selling remains a big deal as insiders understand the internal goings-on inside the company. They may have information allowing them to take advantage of that information for their own profit. Recently in Congress, there has been an investigation into insider selling of stock before the coronavirus outbreak. Some committee members may have had details allowing them to profit unfairly compared to those of us without the knowledge. The SEC created Form 4 during the Great Depression to offer some safeguards against insiders of companies from unfairly profiting with the knowledge they possess. It is such a big deal, criminal fines and penalties could result from failing to report any such transactions, as evidenced by the Congress members' scrutiny. So what triggers the Form 4 filing? Let's look at that in the next section. What triggers a Form 4 filing? Form 4 is a two-page report covering any buy or sell orders insiders place on the open market and any exercising of stock options we mentioned earlier. Any individual or company must file a Form 4 when a change in holdings of company insiders occurs, i.e., CEO, CFO, COO, and so on. The filing is related to Forms 3 and 5, which cover insider changes to any company holdings. Key takeaways of SEC Form 4. The SEC can use these documents, including Form 4, to refer to other government agencies. If investors don't file within 2 days of the transactions, an assessment of criminal charges or fines could result. The SEC uses Form 4 in any investigations or litigations involving federal securities laws. Individuals or companies file a Form 4 on the sec.gov website using the EDGAR system that we know and love from our studies of financial reports such as the 10K. I won't go into the nitty-gritty of filing a Form 4, for our purposes, it is more important to read the form and understand its meaning. Let's move on to Form 4 itself and discover what it can teach us. What does Code M mean on Form 4? Now that we understand what a Form 4 is and how it works, let's explore the actual form itself. First question, where do we find Form 4? Good news. The exact same place you go to find the annual and quarterly reports on the EDGAR website through the SEC. Instead of looking for a 10K, you type in a 4 and then hit search, and voila. One note, you do need to change the radial dial in the middle of the page to include ownership, and then Form 4 will pop up. The name is straightforward, as is the date of the transaction. One thing to note is the position held by the person buying or selling the shares. If you see the CFO buying shares constantly, that could mean he believes in the company's financial strength. Reed Hastings' Form 4 from Netflix. The most important section of Form 4 is the table that outlines the buying or selling of the stocks. For example, you might see common stock, convertible preferred, and employee stock options. The most common ones you will see, but there can be up to 10,000 types of equities. Don't worry, the bulk you will encounter will be common stock, employee stock options, and preferred. You will also notice that it lists the number of shares bought or sold and these trades' dollar amounts. They list them as acquired or disposed of, which translates to buy or sell. The last item, which we need to clarify, is the transaction code. On Form 4 from Netflix for Reed Hastings, you see two types of codes listed, M and S. Every Form 4 filed contains filed transactions, and the form uses transaction codes to help describe the action taking place. A good starting point for understanding the transaction codes and deciphering insider trading is remembering that P stands for purchase and S stands for sale. They equal the most common codes you will encounter. Another code you will encounter is code M, which stands for the exercise or conversion of derivative securities. If that subject interests you, please click the link below for more detail on the derivative securities transaction codes. Derivative security transaction codes. Looking at the Form 4 from Netflix, Reed Hastings sold shares of his stock during the time listed on the form other than exercising the derivatives. What can we derive from that? That is a subject we will tackle next. What can we learn from reading a Form 4? The legendary investor Peter Lynch of Fidelity Investments once said, "Insiders might sell their shares for any number of reasons, but they buy them for only one: they think the price will rise." Peter Lynch was a staunch believer in fundamental analysis and understanding the company and what it makes and sells completely before buying. He felt that as a group, who knows a company's product, management, and future prospects better than the company's leaders? Investors can benefit from insider knowledge legally by following public databases that track insider buying or selling. One of my focus points on my stock checklist is studying management, and Warren Buffett discusses his thoughts on management multiple times throughout his letters to shareholders. And what better way to evaluate management than studying their actions regarding their ownership of the company they work for? Many investors regard tracking insider trading as an integral part of their company analysis. Why is buying or selling their shares a big deal? Generally, insider buying illustrates management's confidence in their company. Many consider insider buying a bullish sign or a sign that they feel that the company's price will rise in the short term. On the flip side, selling is considered a more bearish sign that management is offloading its shares before the company's price falls. Studies have shown that being on top of insider transactions represents profitable investments, as insiders tend to beat the market, as one would expect. The studies have shown that the odds in favor of more insider buying following more insider buying remain 3 times greater than the odds of a purchase followed by a sale. There are some general rules to follow when tracking insider trading. Insider buying continues is far more significant than insider selling. As I mentioned earlier, insider selling could indicate the need for cash for larger purchases such as real estate, funding a college education, paying taxes, etc. We could only consider this a red flag if the whole management team sells large volumes of shares. Who's doing the buying of shares? Most of us would assume that following the chairman, chief financial officer, and vice presidents is a no-brainer, which corresponds to the right answer. However, don't ignore transactions occurring farther down the food chain. Managers closer to the company's operations buying shares equals a great vote of confidence. Pay attention to the size of the purchase relative to the total holdings. Those purchases speak volumes about the confidence in the company. When a CEO buys 250,000 shares when he already owns 500,000, that equals a very bullish signal. If you see a lower-level manager who owns 5,000 shares triple his ownership to 15,000 shares, that equates to incredibly bullish. The following examples illustrate general fundamentals that you should follow when tracking insider buying. The behavior of insiders will speak volumes about the trust in the company, and there remains no better way to observe the behavior of the leadership team of your company than their stock ownership behaviors. Fundamentals of tracking insider buying. The size of the trade is important. The dollar value of a buyer equals emphasis. If Bill Gates buys a few shares, not that big of a deal, but if the regional vice president spends a year's salary on purchasing shares, pay attention. The type of dealing is important. Buying exemplifies far more impact than selling shares. The sales of shares indicate a cash flow issue for the seller. They need cash for a large purchase, and liquidating their shares remains easier than taking out a loan. Pay attention to the number of insiders buying or selling. The best scenario is finding a situation that includes 2 or more insiders buying shares in a compressed period. The price paid for the transaction is important, as you would expect that insiders would buy when the price was low and sell when the price was high. Pay attention to when the transactions occurred and the selling price. If the price is significantly different from the current price, wait for more insider buying to confirm the behavior. Insiders tend to be early in their transactions, especially when buying shares. Okay, now we know how to read a Form 4 and have some general rules on tracking the transactions. Where do we find the data to follow these transactions? Where can we track Form 4 transactions? Several websites offer the ability to track insider activity of any company. Forbes, Finviz, GuruFocus, Stratosphere.io, BAMSEC. All the above sites provide free access to search for different companies and their insider activity. Another opportunity to track any financial forms filed by your company is to sign up for RSS alerts on the sec.gov website. A radial dial allows you to sign up for alerts to your feed for any company you follow. As a side note, this is a great way to be aware of when your company files a 10K, 10Q, or 8K. Final thoughts. The Form 4 is a straightforward filing that allows the average investor to get insight into the stock transactions of the management of any public company that they are following. Using the form to your advantage to find companies that management has confidence in enough to invest their own money back into the company is an extremely bullish signal. A whole sector of the investment community tracks these transactions quite closely, and it is a major factor in their analysis of companies. When I am looking at buying a company, one of the checkboxes I have on my list is to look and see if any insiders are currently buying shares or selling shares. Assessing management is difficult, especially without direct access. Using Form 4 gives a little insight into what the management thinks about the future prospects of its company. SEC Form 4, Statement of Changes in Beneficial Ownership Overview. What is SEC Form 4, Statement of Changes in Beneficial Ownership? SEC Form 4, Statement of Changes in Beneficial Ownership is a document that must be filed with the Securities and Exchange Commission (SEC) whenever there is a material change in the holdings of company insiders. Insiders consist of directors and officers of the company, as well as any shareholders, owning 10% or more of the company's outstanding stock. The forms ask about the reporting person's relationship to the company and about purchases and sales of such equity shares. The filing of Form 4 relates to Section 16 and 23 of the Securities Exchange Act of 1934, as well as Sections 30 and 38 of the Investment Company Act of 1940. Disclosure of information required on Form 4 is mandatory and becomes public record upon filing. Key takeaways. Form 4 must be filed with the Securities and Exchange Commission whenever there is a material change in the holdings of company insiders. If a party fails to disclose required information on a Form 4, civil or criminal actions could result. It must be filed within 2 business days starting from the end of the day the material transaction occurred. Understanding SEC Form 4, Statement of Changes in Beneficial Ownership. There are multiple SEC forms that are associated with the ownership of stocks or securities for publicly traded companies. SEC Form 4 is one of 3 forms that is usually required by the SEC. Form 3. Individuals file Form 3 when they first acquire a stock and are registering the securities for the first time. The form must be filed within 10 days of the individual becoming an officer, director, or beneficial owner at the company. Form 4. Form 4 is required to be filed by a company or the individual at the company when there is a change in the holdings of company insiders. Form 4 must be filed with the SEC within 2 days of the transaction. Form 4 is a 2-page document, which covers any buy and sell orders, as well as the exercise of company stock options. Options are contracts that give the holder the right, but not the obligation to buy or sell a stock at a certain price, and by a specific date. Options are often awarded to executives and directors of companies as part of the employee incentive plan. Typically, the options can be cashed out or redeemed after a predetermined holding period has expired. Form 5. Form 5 is filed if a person conducted a trade of the company's stock but failed to report it via Form 4. Form 5 allows the individual 45 days following the close of the company's fiscal year. The SEC is able to use the information in SEC Form 4 when referring a case to other governmental authorities and self-regulatory organizations, SROs. If a party fails to disclose the required information on Form 4, civil or criminal actions could result. Forms related to SEC Form 4. Several other forms are critical to maintaining transparency and recording the actions of public company executives, officers, and directors. These include the company's annual financial report, which is filed via a 10K, and the quarterly financial report filed via a 10Q. If a company is issuing stock for the first time, they must file Form S-1, and if any amendments must be made, they file Form S-1A. The 8K is filed when there are unscheduled material events or corporate changes. The SEC has the capacity to use information disclosed on Form 4 in investigations or litigation involving federal securities laws, in addition to other civil, criminal, or regulatory statutes or provisions. How to file SEC Form 4, Statement of Changes in Beneficial Ownership. In general, a party must file Form 4 electronically via the Commission's Electronic Data Gathering Analysis and Retrieval System (EDGAR). Exceptions can occur during hardship. It is mandatory within 2 business days starting from the end of the day the material transaction occurred. Here is a link to a downloadable SEC Form 4, Statement of Changes in Beneficial Ownership. Real-world example of SEC Form 4. In February 2020, Elon Musk, the Chief Executive Officer (CEO) of the publicly traded company Tesla Inc. (TSLA), filed SEC Form 4 as an individual. Below is a copy of the Form 4 as well as the details of the transaction, which was obtained via the SEC's EDGAR system. Section 1 contains the reporting person's name, which was Elon Musk, and the address for the company. Section 2 has the company name of Tesla Inc. Section 3 contains the transaction date of February 14, 2020. Table 1 Section 1 contains the type of security, which was common stock. Section 4 contains the number of shares, the action taken, whether the shares were acquired or disposed of, and the price at which the shares were bought or sold. The SEC Form 4 shows that Elon Musk purchased 13,037 shares at a price of $767, which left Mr. Musk with a total number of shares owned of 34,098,597 following the purchase. Section 5. How to use insider and institutional stock ownership. If you're an investor, it pays to know what the company's owners and most important shareholders are doing. By watching the trading activity of corporate insiders and large institutional investors, it's easier to get a sense of a stock's prospects. While insider or institutional ownership on its own is not necessarily a buy or sell signal, it certainly offers a handy first screen in the search for a good investment. Below is a quick review on how you can access insider and institutional ownership information to make well-informed investment decisions. Key takeaways: insiders are a company's officers, directors, relatives, or anyone else with access to key company information before it's made available to the public. Form Def 14A, the proxy statement which lists directors and officers, and the number of shares they each own. Companies file Schedules 13D and 13G to disclose outside beneficial ownership information of more than 5% of a company's stock issue. Stock owners file Forms 3, 4, and 5 to disclose insider beneficial ownership when they have more than 10% of voting power. Insider ownership: insiders are a company's officers, directors, relatives, or anyone else with access to key company information before it's made available to the public. By paying close attention to what insiders do with company shares, savvy investors can make the reasonable assumption they know a lot more about their company's prospects than the rest of us. Since insider ownership and trading can impact share prices, the Securities and Exchange Commission (SEC) requires companies to file reports on these matters, giving investors the opportunity to have some insight into insider activity. A trade can be legal or illegal depending on when an insider makes it. It becomes illegal if information behind the trade is not public. The forms: you can retrieve reporting forms from the SEC's EDGAR database or the SEC Info Insider Trading Reports. The most relevant forms that help investors review insiders include Form Def 14A, Form 13D and 13G, as well as Forms 3, 4, and 5. Form Def 14A. This form is also known as the definitive proxy statement. This is the proxy statement in which investors can find a list of directors and officers, along with the number of shares they each own. As an SEC requirement, publicly traded companies must file Form Def 14A ahead of their annual shareholders meeting. This form also lists beneficial owners, or people or entities owning more than 5% of a company's stock, along with other pertinent information like board member nominations, as well as executive compensation. Schedules 13D and 13G. Schedule 13D and Schedule 13G are also relevant forms to disclose outside beneficial ownership information. The following is a brief description of each form. Schedule 13D. This form is also known as the Beneficial Ownership Report. Anyone who owns more than 5% of a company's stock must file Form 13D with the SEC within 10 days of a stock acquisition. The form must also include the reason behind the stock acquisition, whether it's a merger, company acquisition, or takeover. Other information on this form includes the owner's identity and the source of the funds for the transaction. Schedule 13G, just like Schedule 13D, this form lets the public know about anyone who owns more than 5% of a company's total stock. But it's much shorter than the 13D because it requires much less information. Owners who acquire more than 20% of a company's share must automatically file a Form 13D. Forms 3, 4, and 5 are filed to disclose insider beneficial ownership when shareholders have more than 10% of voting power. Forms are filed at different stages of stock acquisition. Individuals file Form 3 when they first acquire shares. This form is also known as the initial statement of beneficial ownership of securities. Form 3 helps the SEC track initial ownership along with whether there is any suspicious activity going on. Form 4 is also referred to Statement of Changes in Beneficial Ownership. This form is used to report any changes of ownership of insiders who hold more than 10% of a company's stock. Part of the reporting includes the shareholders' relationship to the company. Also known as the Annual Statement of Changes in Beneficial Ownership, Form 5 is an annual snapshot of holdings. Insider trading must be filed electronically through the EDGAR system within 2 days of the transaction, giving outside investors reasonably up-to-date ownership information. Interpreting insider reports. High insider ownership typically signals confidence in a company's prospects and ownership in its shares. This, in turn, gives the company's management an incentive to make the company profitable and maximize shareholder value. But you can have too much insider ownership. When insiders gain corporate control, management may not feel responsible to shareholders and instead, to themselves. This frequently occurs at companies with multiple classes of stock, which means one class carries more voting power than another. For example, Google's much-publicized initial public offering (IPO) in the fall of 2004 was criticized for issuing a special class of super voting shares to certain company executives. Critics of the dual-class share structure contend that, should managers yield less than satisfactory results, they are less likely to be replaced because they possess 10 times the voting power of normal shareholders. While insider buying is usually a good sign, don't be alarmed by insider selling, unless there is a lot of it. Insiders tend to buy because they have positive expectations, but they may sell for reasons independent of their expectations for the company. Which insiders to watch? It's important to know which insiders to watch. Look for clusters of activity by several insiders. If a company has more than one instance of similar insider trading over a short period, there's a sign of a consensus of insider opinion. Large transactions also mean more than small trades. Insiders with proven track records with their Form 4 activity should be watched more closely than those with little or poor past records. The most telling trading activity comes from top executives with the best insights into the company, so look for transactions by CEOs and CFOs. Finally, be careful about placing too much stake in insider trading since the documents reporting them can be hard to interpret. A lot of Form 4 trades do not represent buying and selling that relate to future stock performance. The exercise of stock options, for instance, shows up as both a buy and a sell on Form 4 documents, so it is a dubious signal to follow. Automatic trading is another activity that is hard to interpret. To protect themselves from lawsuits, insiders set up guidelines for buying and selling, leaving the execution to someone else. SEC Form 4 documents disclose these hands-off insider transactions, but they don't always state that the sales were scheduled far ahead of time. Institutional ownership organizations that control a lot of money, mutual funds, pension funds, or insurance companies, which buying securities are referred to as institutional investors. These entities own shares on behalf of their clients, and are generally believed to be the force behind supply and demand in the market. The debate over the implications whether institutional ownership in a stock is a good thing remains a matter of debate. Peter Lynch, in his bestseller One Up on Wall Street, lists the 13 characteristics of the perfect stock. One of them is this: institutions don't own it and the analysts don't follow it. Lynch favors stocks that the big investment groups overlook because these stocks have more of a chance of being undervalued. Lynch argues that companies whose stock is owned by institutional investors are fairly valued, if not overvalued. William O'Neill, founder of Investors Business Daily, on the other hand, argues that it takes a significant amount of demand to move a share price up, and the largest source of demand for stocks are institutional investors. O'Neill reckons that if a stock has no institutional owners, it's because they have already seen it and rejected it. In his book How to Make Money in Stocks, O'Neill has institutional sponsorship as the sixth characteristic to look for in stocks worth buying. O'Neill and Lynch both agree that institutional ownership can be dangerous. These big institutions move in and out of positions in very large blocks, so they cannot buy or sell holdings gracefully. If something goes wrong with a company and all its big owners sell en masse, the stock's value will plunge. Although there are mutual funds that operate with longer-term horizons, and pension funds tend to be long-term stockholders, institutional investors tend to react to short-term events. The high correlation between high institutional ownership and stock price volatility is a fact of life in investing, and so it pays to know what the institutions are up to and whether a stock you are interested in already has a large institutional interest. Where to find holdings information. Institutional investment managers who exercise investment discretion of more than $100 million in securities must report their holdings on Form 13F with the SEC. This form is filed quarterly by institutional investment managers who have a minimum of $100 million in assets under management (AUM) within 45 days of the end of a quarter. Again, you can search for and retrieve Form 13F filings using the SEC's Edgar database. Yahoo Finance also provides a very useful site that details stock ownership. Get a quote of a particular company, and then click the section labeled Holders to receive details on the company's institutional holders. The bottom line: sure, insiders and institutions tend to be smart, diligent and sophisticated investors, so their ownership is a good criterion for a first screen in your research or a reliable confirmation of your analysis of a stock. But never base an investment decision solely on insider or institutional ownership information.
Thank you again for watching our How to Read Form 4 SEC Filings video to the end. We hope that you found it educational. In this video, we explained what is SEC Form 4 and how do you read Form 4 filings. We explained this at the level for beginners. We talked about all the various aspects of an SEC Form 4, Statement of Changes in Beneficial Ownership, giving you an overview as well as a detailed explanation down to the beginner level. And then we talked about how to use the insider and institutional stock ownership SEC 4 to help you in your trading career, give you another tool, another edge in succeeding in your trading career. If you have any questions regarding any of this information, please post it in the comments below this video in our free Discord, for which you can find an invite in the description box below, in our Facebook group, and you can always contact us via any of our social media links that you can also find in the description box below. Also, please let us know, again, if you have any questions regarding how to read Form 4 SEC filings or any other types of SEC filings for which you might like a similar type of explanation video, please let us know, again, in the comments, in our free Discord, in our Facebook group, etc., social media. Let us know what else we can help you with in terms of how to read SEC filings or anything else to help you succeed in your trading career. We hope this all helps. Good luck and have a great trading day. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow BeachBum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.